Joshua Jensen, CPA. Some know me as JJ the CPA. Honored to be here this year. So the changes that we're seeing in Georgia that would really be directly towards Georgians would be that effective 1/1/24, digital goods are going to be subject to sales tax. We need to keep an eye on that. Also for Section 174, this relates to research and development expenditures. There's been a law change at the federal level which requires amortization, but down at the Georgia level there's been a decoupling, so Georgians don't need to follow that down at the Georgia level of reporting that, which is a good way to say that they're going to get the deductions versus having to amortize. And also there's been an expansion related to the pass-through entity election that for partnerships, they're able to include other partnerships, corporations, and trusts that otherwise wouldn't have qualified with S-Corp owners that now can be included. That's effective 1/1/23. Corporations and partnerships, when they're reporting their income at the federal level, the key is, and we probably all know this, there is no tax at the entity level for federal purposes. That tax is then passed through because that income is picked up by the shareholder or the partner. So with that being said, really whatever that net income is, the key here is that's what that partnership or S-Corp owner is going to pay tax on. So the key in doing tax planning is to ensure that you're very aware of what the S-Corp and partnership income is, because ultimately the individual is the one paying that tax. So with the changes that are going on with the recent developments, I think some key changes with the S-Corp and the partnership is going to be really looking at the income that's subject to Social Security and Medicare taxes. So for S-Corp owners, it's ensuring there's reasonable compensation. The IRS, I think, is going to have an easy IRS target to reclassify distributions to those wages, which are subject to that Social Security and Medicare tax. And then for partnerships, those that are active or receiving guaranteed payments for services, maybe more reflecting that as distribution, I think easy adjustments in IRS targeting related to reclassifying that subject to self-employment tax. So more what I would get at is that what we want to pay attention related to these entities is what is subject to that tax, making sure it's reasonable, and then also making sure we're keeping an eye on basis to allow not only for distribution, but for losses. These seem to be a real trend based on what we're seeing on the Schedule K-1s on what the IRS will be really looking at and targeting.
Thank you for watching. Please subscribe and click the notification bell to be the first to view GSCPA videos. Follow us on other social media for even more society news.